All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I haven't made much secret of the fact that I don't like this market, meaning I don't like the upside prospects in this market as they sit right here, right now. There is a lot of danger in playing the downside right here, as a little bit of news will just catch the short sellers in a big way, very quickly, very suddenly, and it won't feel too good. And the shorts have been, let's face it, the shorts have not been rewarded this year at all. The shorts have had to deal with a lot of pain, a lot of, come on, we're seeing worse economic data, we're seeing lagging earnings, we're seeing bad news, and stocks still seem to manage to go higher, right? That's what the shorts have had to deal with. And so, we do see the shorts a little more conservative than what I think we would normally see them right here, rightfully so. Rightfully so. And this morning we talked about some of the confirmation that the bears need to see in order to say, hey, you know what, this market is going down now and hard and fast. But we don't have a ton of that out there. We do have some individual stocks and whatnot there. For the challenge, there was one possible bearish trigger. I'm waiting here just another 2 minutes for the report to come through, and that's Whirlpool. It's a long shot that it'll be a trigger. And not because I don't think it's going down or anything like that, and it has the downside 3-7 crossover associated to it, but I think the metric that it's missing is the potential for a 2 ATR move. And if we look at the ATR, it's about 425, so it'd be looking for about an $8.50 move. What's the potential on that? Personally, I think it'll have no problem making that type of a move, but we'll see what the algorithm says here with that. So that could be a trade here in about the next 60 seconds. We see some other action on crossovers. AT&T with a downside crossover, but not even close to a signal. We have Altria with a downside crossover. You can see this stock was up big this morning on the talk of a Philip Morris merger with these two companies coming back together. But that has been a gap that has been sold off fairly aggressively here today. And it has taken well over a 2 ATR move to create that action. Here's the minute chart for Philip Morris. You can see Philip Morris is down sizably here this today, but off its lows, and then Altria, which went all the way up to 52 this morning, and it traded up there. It wasn't like it didn't trade here; it traded up here on big volume, but it is just fallen off sharply as the day has progressed here. Okay. Alrighty. Yep. No signal there for Whirlpool. Consolidation risk component just too high on it for a trade trigger. The option that I had selected to play if it were a trigger was the 20th of September. It was only 24 days, so I was going to do a little lighter position, but I was looking at the 135s there. But looks like I'm not going to be able to play him here for the challenge as it is not a trigger. I do think it's a very interesting setup if you're looking for some bearish exposure. Now, earlier today I was asked about some of my personal trades since I wasn't in anything for the challenge. A question came in, am I playing anything myself, and would I be willing to share? And, it's one of those where I trade for myself. I enjoy it. I don't think I trade nearly as actively as many people perceive that I would. I think some people perceive that I'm out there trading all day, every day, which is not the case. I'm probably on average maybe 1 to 3 personal trades a week. And sometimes I will just kind of look and go, I don't really like anything, so I'll move on. I do not stare at stocks and go, I wonder where this stock is going to go tomorrow to try to make a trade. When it comes to my personal trades, it's, hey, is this in a really nice spot that I like? And I don't use a lot of metrics. I don't use a lot of nothing overly fancy. It is just, hey, you know what? Does something tickle my fancy here today with kind of how things are trading? And that's kind of how I go about it. And that is a very fun, a very relaxing way for me to go about it. Now, in the market right now, there's a lot of risk factors out there. Okay, so please, if you're going to take any of these personal trades or anything like that, please take it with a grain of salt, knowing I'm not sitting here with these hard stops and this, well, if ABC happens and this is my expectation, and just some of the ridiculousness that gets put onto trades, in terms of hyper analysis. To me, it doesn't, right now, this market, those things don't work. Why? Because we have a market that's very contingent on the next news, the next kind of fear element, and we're in the middle of August, right? So it's one of those where, as I've gone out and set up my personal trades, I have done so using mostly weekly options, and I've put on exposure that if they go to zero, I don't care. Okay, so please understand that. I know for some traders, going to zero is just not even a consideration. You shouldn't have it. Never should happen. It's bad trading. I don't subscribe to that. I'm much more of an exposure guy, and I know that the trades I set up have triple, quadruple, quintuple potential, so I'm willing to risk 100% for that, right? If I were doing longer-term options, then, yeah, we would talk about something different, or trading stocks, sure, something different. But, as I show you some of these that I've traded, I'll keep that in mind. The only trade that I got into on Friday was some FedEx puts, and I didn't really like the value of them. And I held them through yesterday. They're this week's expiration, and I did pull them off here today. Didn't end up gaining a ton. It was lunch money there with FedEx, but that was the only trade I got into Friday. Yesterday I got into some Caterpillar on the put side, and this morning I added two those puts here on Caterpillar. I have made no let me find the best way to phrase this. You know where I stand with Caterpillar. You know where I stand with the trade war stuff, and I think path of least resistance is lower. I want some exposure to that. For me, it's Caterpillar, right? So, I have that. I kind of expect 110 has a potential to come into play here for it, and with those options, it would pay off very nicely. Now, if Caterpillar rips, I'll be out in the cold, and okay, my options are good as zero, and I'll look for another opportunity to get in the future. So I bought some yesterday, bought some more here this morning on the gap up. And the last one, in terms of an individual stock that I'm in, and I bought these today, are some GM puts. And this is one where I really like trading GM. I know for challenges in the past, my track record with GM is absolutely abysmal. And, it's just been one of those, I get in and the stock goes 3% against me. I'm in puts, it goes up 3% next day. I'm in calls, it goes down 3% the next day. But that hasn't been the way with my personal trades with GM. So, I look at it, I go, okay, if I share about it, are we going to see it go 3% higher tomorrow? And I will absolutely have no explanation if it does do that, other than to say it's possessed. But anyway, this is one, it broke the lows from yesterday. here today, and so I got on in here just about an hour and a half ago is when I got in. So that's what I have individual stock wise, just Caterpillar, GM, option trades on the downside there. Now I do have some SPY put spreads. I now have two of them, and both of them are looking for a move to the 200-day moving average. And that's it. Now, what I did go out and shop around for today were any ways to take advantage of a potential big uptick, where, let's just say the market would, go through one of these right here, back here in November, have one of these types of rips. Anyway, can I start to set up to take advantage of a potential for that type of scenario? And I just didn't like the pricing. The pricing is not good enough at all. In fact, if we come into the SPY and we come and start to look at something like a January call spread scenario out to 300. I mean, these things are going for 40 cents. The debit call spreads there. And, with max return of $1, so max gain of 60 cents to be that far out of the money, just not priced well enough for me to want to have anything to do with it here just yet. I don't think the market has underestimated some of the option pricing on the upside call side yet. I do think it probably takes another leg or two lower in the market for the market to start, putting that into or taking that into account and start to see the call option sides really start to get cut down here in this market. So we'll see, kind of how that plays out, but didn't really find anything I liked for the upside to say, hey, you know what, let's just say if this market's wrong. And, maybe some things are interesting if I'm, convinced the bottom is in right here. But I'm not convinced of that, so I'm not willing to pay up on some of the pricing. If we get another strong leg down in the market, I might be willing to pay up on a little bit of the pricing there. And, if and when I do, I will keep you posted. But that's about it, for me. There's some interesting charts out there, some interesting stocks out there. Halliburton, here we go. Down another percent with oil up $1.50. It was up $1 last night, $1.28 right now. So we have oil up over 2%. Halliburton still red. Wow, just wow. And we talked about this stock a while back. Is it destined for single digits? It sure looks it in the way that it is trading. You take a look at something like EOG Resources. Oil bouncing. And it just continues to get, sold off. I still like XLE short with Chevron long, in terms of that combo trade element. I think that's still a really solid one on the board, but that's not really an option trade. That is much more of a stock combination trade there for it. Okay. All right. Last thing, new challenge date has been decided on, and so we will be launching the next challenge. This current challenge ends on the 20th of September. The next challenge will start on the 27th of September. Now, a couple things to clarify. Number one is that I won't just sell all trades on September 20th. If I'm in trades on September 20th, I'll let them play out. That's just the last day of entering new trades, and so they will need some time to play out. But the new start date will be the September 27th. Now, this is an interesting time because for a number of factors. Number one, the market will be gearing up into earnings season. Number two, October seasonality can be very interesting. And so for those couple factors, we could be into we're going to be starting in a very interesting time period here for the market, and something that I'm excited to do, and excited to get on with here. And I apologize, I said the 27th, I meant the 26th. It's Thursday, September 26th will be the new start date for the next challenge. In fact, let's just go ahead and throw this in here. Next challenge start date will be 9/26, and so we'll get off and rolling. I will be making a couple tweaks to the algorithm for it, and I will talk about those ahead of time. They're not major. They're, in fact, most won't even notice anything. There will be a couple new stocks added and a couple stocks subtracted from the watch list. Some stocks they've not triggered at all here over the course of this quarter, and with how the options are, it's time to move on from them and say, you know what, let's get a different company, a different stock in there. So we will see a few changes to that. You'll see a little bit of tweak to the ATR method there, but nothing that's going to be significant or it's going to really change the trajectory of different trades and whatnot there. Okay. So anyway, 9/26 will be that date. We'll go back to 3K, and we'll run the same challenge. Same process, and continue on with it from there. As far as an end date for that, 4 months, is about the end date that we're looking at, but we have not decided on an end date here just yet. When we start getting into the holidays there in December, it's a time of year that sometimes trading can be pretty dry, and then sometimes it can be pretty exciting. So one of those where I think as we get closer to that time of year, we'll decide whether to cut the challenge off and start a new one in January, or to keep going through that time period. And it'll just depend on what the market conditions are shaping up to be. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.